This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. This is the chart that I have posted many times, which is continuous contract. So here's the highlight. When this on January 29th, live, and I had already warned on January 22nd with a big piece that synthetic rallies cannot stall. Same concept I gave exactly last month on the AI rally. Exact same concept, which is all this FOMO, it needs more oxygen to fuel the fire. Otherwise, it stalls. It creates this parabolic break, enter volatility and liquidation event. Boom, we caught that live, 28th, 29th, and 30th. Boom. Now, I also said now it's done. Investors are going to get shaken out. The last in are the first out, and trend traders don't care. But swing and chase traders most certainly do, especially short duration options. They're destroyed, and boom, this is going to be sideways for the better part of this year. That's what I said. It has to go sideways and digest, and boom. It doesn't matter about the narrative. Silver, supply deficit, I don't care. It's 1973 all over again. It's going to take all year to reset and restore the confidence of the precious metal bulls. So we had a reflexive bounce, made a lower high, made a lower low, reflexive bounce, made a lower high, and we've been petering out ever since. And here we are, exactly in that 4,200 area. Can we overshoot? Absolutely. No question about it. Where's the overshoot, you ask? Don't be scared, but this is the overshoot. In other words, with both hands, would I expect 3,500 continuous contract to be defended? Now, a little bit right here will bounce. I wouldn't be surprised at all. Look at this channel support from the breakout, which happened in March of 2024, and the outsized performance in gold for all of 2025 until January 29th, and a 16% pullback in 2 days. Silver was 39% pullback. This is where we are, 4,200. We can have a little bounce, but I'll tell you, it would not surprise me if we go all the way back down to the breakout level where there's a gap fill at about 34.55 continuous contract in gold. I know that's not what you want to hear, but that's what I see. Okay. And I haven't changed from that one bit. GLD, I had 392, which is Keltner channel on a weekly for GLD. It's the 50 week. It's kind of important. Now we've overshot it, and already they're starting to monetize a little bit, but it's not quite safe. Gold is getting a little bit of a bounce, but honestly, gold has been extremely oversold, so a little bounce wouldn't be a surprise at continuous contract 4,200. And then what happened? We had oil take center stage, and gold wasn't the shiny thing anymore. Oil rose aggressively on the Iran war, and gold fell out of favor as a momentum trade. And also Turkey started selling gold. Russia started selling gold. So you had that rotation out of gold into oil. And now it came down to the bottom of this channel, which I'm showing you here, continuous contract. And we're, 4,200 would have been a good place for it to stop, but it didn't. It overshot. Gold is having a nice trounce and then bounce, as discussed last week when it came to 4,200 continuous contract and then broke below and then snaps back. That was a high probability bet that we would have some support at that level on that big, long 2025 to 2026 trend line that I showed you. Anyway, we are having the gold, silver, minor bounce, also bullish percent index on the zero line, went over all of that, but I also said it's just a bounce. I still don't see this as the turn higher. I also don't see this oil dump as sustainable. Anyway, we've got gold that I wanted to talk about real quick, but basically this is a big bounce in gold. I just don't think it's going to be swing worthy. In other words, I still think we can have a nice little bounce, but then once all the drama comes back in this summer, we can have another little trounce. We've got also gold moving higher. So they're basically rotating. Lots and lots of rotation out of oil into gold. GLD literally tagged that 373.57 when we opened up last Wednesday. We were heading down into this level, and then Thursday, big, beautiful, bullish engulfing. That was Friday, and here is Monday. Wouldn't be surprised at all if it heads into about the 200 day and starts to hit its head. But for right now, you've got GLD bouncing perfectly and GDX also right below the 50-week right into resistance. So they all look very similar. That's the rotation anyway. Gold is catching a bid, and that's helping a whole bunch of miners. One of them, by the way, is FCX. So you've got FCX and also copper and gold. Remember, SBSW has gold, but it also has palladium, platinum. So they're not, you also have rates as part of this mining extravaganza. Gold is pushing higher into this 4383 area, which is basically 4400. That's where it had support back in May. That's where it broke down, most recently the beginning of June. So you get your bounce in gold and miners and silver, and it's moving. Gold is moving with equities as oil comes down. As oil went up, gold went down. And now that oil is falling, gold is going up. Gold has had its very firm bounce with silver and miners, etc.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.